Hey, this is Warren Redlick. I'm going to break down for you the Lucid Q2 investor call. Thanks to Bear's Workshop for doing their live stream. It was very useful. Check out Bear's Workshop. Link to their full video in the description below. Are you ready? Let's go. So I'm going to start with the absolute worst moment of the entire investor call. This is an analyst asks questions, and watch Peter Rawlinson dance and avoid the question. Just listen to this.
Our next question comes from the line of Charles Caldicott with Redburn. Your line is open.
On the production, I'm wondering, can you help reassure us a little bit on the ramp up by giving us an idea of what your weekly production rate exited Q2 at and what it is today?
So note the first part of the question, weekly production rates. Rawlinson's not going to answer this question. We're going to come to that. Listen to the rest of the question and let's go forward.
On order intake, Sherry, you just mentioned there that, if you smooth out the last 3 months, it was actually ahead of what you expected. But if I look at it, I think I'm right in saying that you've averaged about 70 or 78 orders a day in the last period since you updated us. And in the 3-month period before that, which was March to May, it was basically the same as that. So I'm wondering, is the sort of explanation that there were cancellations and so the gross order intake was significantly above, or maybe the expectation is that the order intake would slow?
Now notice there, he gave some specific numbers about the reservation volume, and Sherry's going to answer that question without really answering that question and not getting specific on numbers.
There was $1.4 billion of purchase of securities in Q2. Can you just tell us what that is and whether or not we should treat it as being as liquid as cash when it comes to your funding requirements?
Specific question, what's this $1.4 billion in investments? And again, you're going to see this. We're not going to get a straight answer from Sherry about that either. But let's get into Peter's answer or non-answer of the weekly run rate. It's shocking to see how he dances around this and how bad he sounds.
I'm really loath to provide guidance on weekly production rates. And this is because it can be so misleading.
Yeah, facts can be misleading. Notice how he pauses, he hems and haws. If you watch the whole investor call, listen to the whole investor call, Peter speaks very, very straightforwardly when he's reading off a script, basically. Bear suggested it might have been pre-recorded. He was so smooth in the beginning when he's dealing with questions. And how did he not anticipate the weekly run rate question? I mean, this is the thing, actually, the shocking thing to me was, it doesn't surprise me that he didn't answer the question. It surprised me that he was so unprepared to answer the question. He wasn't ready for the question to be asked, and he wasn't ready to figure out how to answer what's such a blindingly obvious question.
There's a whole host of factors. If we can delay production a little bit to put in improvements to our line side supply, which, for example, can improve rate in the future. And once we start cherry-picking specific weekly production rates, I think we get into dangerous territory. I think that the numbers we provide you give the most broad and honest description of our ability to have produced cars through this relevant quarter, and our guidance of between 6,000 and 7,000 cars for the year, I believe, is a very balanced and a realistic guide for the future.
So here's the thing. You initially told us 20,000 for the year, then you told us 12 to 14,000 for the year. Now you've reduced it to 6,000 or 7,000 for the year. So the question is appropriate because you've misrepresented how many vehicles you're going to deliver twice at least, repeatedly over time. So asking for a firm number on a fact is a completely reasonable thing to request. And of course, his idea that we gave you numbers that are most representative of the quarter, no, they're not. You gave production numbers for the first half. You didn't give production numbers for the second quarter. You gave production numbers for the first half of the year. So they are picking and choosing what numbers they give to try to get the best positive spin they can, and they're not giving straight answers on the rest of it. And you're going to see that through the rest of the questions, and I think you're going to see that on the rest of the call.
I'm sorry, I'm not. I don't think it's wise for me to give you a weekly production rate right now.
You see? Do you hear how he's hemming and hawing? How did you not know this question was coming? That's an obvious question. You know, you just underproduced. You know, you've just told us you've cut your production rate, your production forecast. It's such a straightforward question. Well, how many are you producing a week now? It's a completely reasonable question. Or how many did you produce? Tell us what your best week was. Come up with something, but to have nothing at all, this is not good.
Yeah, let me cover off a couple of your questions as well. So you were asking about the short-term and long-term investments. So you're right. We took some of our cash and we parked it in short-term and long-term investments in separately managed funds.
So the question is, what were the investments? And she said, we put them in short-term and long-term investments. We know that in separately managed funds. What are the investments? What did you buy? Securities? Did you put it in bank accounts? What are we talking about? And she doesn't answer that question.
And we did this because we didn't need access to all the cash right now. And we wanted to be able to get a little bit higher return on our money.
So it's something that has return on the money.
Those dollars are accessible to us at any time, though we don't intend to use them right away. And we plan to let them mature and garner the interest rates, which was the purpose why we put them there.
Interest rates. So it appears to be some kind of bank account that pays interest or bonds. It's really not clear what they're in, but she does not answer the question, what are they invested? What are these investments? I mean, hey, maybe they bought call options on Tesla stock. That doesn't seem likely if it's paying interest rates. And then you have the problem that if you're earning interest, let's say 2 or 3% on your account, but you're borrowing money at 12 to 14% interest, then this is a really terrible financial strategy. So this didn't come up. I saw one, I think it was like Yahoo Finance suggested that Lucid is borrowing at 12 to 14%. And then if you cross that with your investing money at 2 or 3%, that's a really bad strategy. But I don't know, nobody asked the question, what are you paying in interest on the loans that you have? Because they talk about the loans that they have. How much are they paying for borrowing and how much are they getting from their investments? It's a pretty dumb strategy to borrow at 10% and get 2% return on your investment with that cash. Unclear what's going on there. Let's keep going.
I don't want people to get confused when they see the cash balance, the cash line on the balance sheet going down quarter over quarter. Some of that was moved into short-term and long-term investments, so our assets are still there. It wasn't that we spent all that, and I definitely don't want there to be confusion on that point.
We don't want people to be confused by the fact that we said it's not cash, but we're saying it is cash, right? They have a line for cash, a line for cash equivalents or whatever, and then they have these investments. And she's playing both sides of the game. She's trying to pretend that it's cash. It's not cash. You don't know if there's going to be a liquidity crisis or some other kind of problem. You don't know if you're going to take a hit on those investments and they're going to lose value. You don't know. If you did something in a bond and the interest rates and society's interest rates go up, then those bonds go down in value. There's all kinds of risks involved in this kind of investing. If it was cash equivalent, you would have listed it as cash equivalent and you didn't. So it's something else and you won't tell us what it is. This is not honest, transparent management. It was a direct question and you didn't answer it.
Secondarily, you asked a bit about just the reservations. So when we looked at that normalized curve I was talking about, we did exactly what you said. I looked back 3 months and I looked back 6 months and 9 months, and I kind of looked at what does that normalization look like. And we are definitely well above that when you look at May, June, and July, kind of taken together.
So she's not really answering the question. The question was, what happened was they had a promotion that if you bought by the end of May, if you put your order in by the end of May, you would lock in the existing price, and they raised prices in June. So they pulled forward reservations. People made reservations in May who might have been planning to wait to June or July to lock in the lower price. And then the question is, well, how many reservations did you have in June and July? And she never answers that question. We never get a straight answer from her about that. Maybe by raising prices, you've just totally intimidated reservations. You're not getting any at all. He gave specific numbers when he did his math. The rate of reservations is not higher. She says it is, but she doesn't give numbers. He seemed pretty straightforward. I ran the numbers. You're flat. Your rate of reservations isn't growing. And she didn't really answer that question. She didn't put numbers on it to demonstrate. She just says it is, but without numbers, how valuable is that?
Cancellations came down slightly, so we've actually seen some improvement there as well. But what you are going to see as we go forward is that the deliveries are going to be increasing substantially. So I don't know you're going to continue to see that kind of growth because you're going to have a lot of deliveries coming out of that number. Now, we will be opening up the Gravity order book at some point. Then we expect we're going to get another large spike again, right? So there's going to be some dynamic nature to these reservation numbers going forward, and we'll be sure to be, as transparent as we can about that in future earnings calls.
You're not transparent in this earnings call. Why are you going to be transparent in future earnings calls? The theory is they have 37,000 reservations. If they actually deliver 6,000 cars, then the reservation number will drop from 37,000 to 31,000. And then the question is, does the orders grow so that they have more reservations? And she's suggesting Project Gravity, which is their SUV that they're supposedly going to, I think they're going to start producing them first half of 2024. Like, I believe that they're going to start taking reservations on Project Gravity at some point. So they're planning some kind of stunt event where they release what their big SUV is going to look like and start taking orders. We'll see if they get orders. At this point, if I'm a buyer, I'm thinking, is this company still going to be around? It's, really sketchy to buy a $100,000 car and not know if the company's still going to be in existence. And there's a lot of problems here that we'll get into. The biggest revelation of the investor call was that they're having some kind of logistics problem. Something is wrong with their manufacturing operations, particularly related to logistics. Listen to this explanation from Peter.
I do have to say that this quarter has proven to be a very challenging period. And whilst we have experienced supply chain and logistics challenges along with the entire industry, the limitations of our logistics system have compounded the challenge.
Let's be clear. The rest of the industry has been having supply chain problems. Lucid, as far as I know, is the only company that has said they have logistics issues. So to say that the rest of the industry is having logistics issues is not true. That is misleading. And this, to my knowledge, is the first time Lucid has admitting to having logistic problems.
And although we continue to face supply chain constraints, the resolution of some earlier gating component supply issues allowed us to push toward increasing the production rate. And as we attempted to push forward the rate, we found that our logistics constraints prevented us from scaling meaningfully this past quarter.
Initially, it was supply chain constraints, and then when they started resolving the supply chain complaints, then logistics came up as a problem.
For example, our ability to feed the correct parts to the line at the correct time and cadence, where each car is built with thousands of parts, and do this whilst maintaining a high Lucid quality build standards.
This is really striking because not having your logistics in order is a really, really bad sign for your execution, for your competence in executing your business plan. This is a CEO who roasted Tesla back in September of 2020, saying that the only company he's seen having production hell is Tesla, and regular car companies don't have production hell. Lucid is in the middle of production hell right now. This is a guy who said, we won't have these problems because we're professionals, we're adults, we have experience in the auto industry. And all of a sudden it turns out it's not that simple. And it's not, you can't blame supply chain anymore if you didn't have your logistics in order. This just means you didn't have your factory ready to go when the supply chain did work out. This is terrible. This is a really, really poor sign for your This is where Lucid was supposed to be strong. They've got this supposedly A team. Even Sandy Munro described Lucid's team as an A-grade team. What does that mean? Why are you not executing well? And if you're having problems with logistics, who was fired? Who was held accountable for these problems? I mean, you're going to hear that they brought somebody, they're bringing some people in, but in a real world situation, and when you're not in this fantasy world of Lucid Motors, if something's bungled, somebody's held accountable, but not here. Next up, we've got quality issues, believe it or not.
Our first half and Q2 production and delivery figures to provide a little context. In the first half of 2022, we produced 1,405 vehicles.
Notice he gives the first half production numbers. He doesn't give Q2 production numbers. Why are you giving first half production numbers and not Q2 production numbers? It sounds like you're hiding something. Every time you play games with the numbers, it sounds like the number you're not showing us is bad.
These were factory-gated vehicles, and this means that they're completed and ready for delivery to customers. But in Q2, we also made a significant number of vehicles that we did not factory gate, instead electing to hold them back in order to ensure that these cars met the highest standard of quality.
Apparently, they made a bunch of cars that didn't work out well, that didn't meet their quality standards, but he wouldn't give a number. He just said a significant number. Is a significant number 10 or is a significant number 1,000? And later in the call, he says that they're at service centers getting things adjusted. You know, and he later in the call, he says it's like panel gaps or something similar to that. It's not, you know, fundamental quality issues. And the other thing to keep aware of is they produced 1,405 cars in the first half of the year, but they only delivered about 1,000. And the 1,405 were supposedly the factory gated or ones that were ready for delivery. So what happened to the 400 or 350 cars you didn't deliver? Why didn't you deliver those cars? You've got this overwhelming demand. You keep telling us you have 37,000 reservations. How did you fail to deliver 350 or 400 cars? What happened there? And nobody even asked about that question. It's a fairly simple math issue that you produced 1,405 cars, and between first quarter and second quarter, it appears they delivered something like, I don't know, 1,050 cars or 1,060 cars or something like that. What happened to the cars that you produced but didn't deliver? Unanswered, unasked. Now, there's more coming on logistics and on their production guidance.
At the same time, we did also experience some unplanned production pauses, primarily in order to improve our logistics processes, which, as I stated earlier, became more apparent as we started to scale. So, as a result, we are reducing our 2022 production guidance to a range of 6,000 to 7,000 vehicles.
Way back when they said they were going to deliver 20,000 vehicles this year. Then they reduced it to 12,000 to 14,000. I think they were still on deliveries. Now it's 6,000 to 7,000 produced, not delivered. So they're not saying they're going to deliver 6,000 cars. They're saying they're going to produce 6,000 cars. And does that number include the ones that don't meet the quality standards? Really unclear here what they're doing.
Our revised outlook guidance for the year reflects the logistic challenges I described as we began scaling, which exposed the immaturity of our logistics processes.
This is like stunning. He's admitting that they failed in arranging their logistics, and yet there seems to be no accountability for this failing.
But I do believe that we've identified the primary bottlenecks and have already taken steps to begin to remedy the situation. We have made the significant decision to bring our logistics operations in-house. We've made key hires to the executive team, and we've restructured our logistics and manufacturing organizations accordingly.
So what you can hear is they're taking steps to fix the logistics problem. What stands out to me the most about this is they're still working on it. This call was in the middle of the third quarter, and they're still in process of fixing their logistics problems. They've identified the problems. They've identified the bottlenecks, but they haven't fixed them. And they're bringing people in to help fix them, but they haven't fixed them. They're bringing logistics in-house, but it's not up and running yet. So whatever problems they had in Q2 are still in existence in Q3. So I don't think we can expect much of a production ramp in Q3 either, because they haven't fixed their logistics problems in the middle of Q3, and they're just getting started on it.
We accelerated access to our logistics center as part of our phase 2 expansion in Arizona. And within a couple of months, we expect to have our logistics center on site at AMP1, which should help mitigate and begin to eliminate the logistics bottlenecks, as well as reduce costs of the shipping and handling of parts.
In a couple of months, they're going to have their logistics ready to go. That's into Q4. That means they're still going to have these logistic problems for all of Q3. How are they going to get to where they aim to go? I mean, think about their production guidance. Their production guidance is they're going to produce 6,000 to 7,000 for the year. Well, if you produced 1,400 in the first half of the year and you only delivered 1,000, so what's going on with that 400? You have to triple your production in the second half of the year compared to the first half of the year. But in Q3, you still have those logistics problems that are holding you up. How on earth are they going to get to producing 4,500 vehicles in the second half of the year when you have all these problems? I don't see how that's conceivable. So it seems very unlikely they're going to hit their 6,000 target anyway. Why would anybody find this credible when you have a history of reducing from 20,000 to 12 to 14,000 to now 6 to 7,000? The odds are when you get to Q3, you're going to say, okay, it's going to be 4,000. And maybe by the end of the year, you produce 3,500. You're way off your projections. Now, another part of this is they're bringing in people from outside to revamp their operations. So they bring in this guy, Stephen David. There was a press release about this guy before.
We're overhauling our logistics processes and introducing a series of improvements to simplify the system and yet make it more efficient and robust. I'm pleased to announce that Stephen David has joined Lucid as Senior Vice President of Operations. Stephen will report to me and will be based in Arizona at the center of our critical manufacturing and logistics operations.
Notice Stephen will report to me, and Stephen will be based in Arizona. Stephen hasn't started the job yet, and we're in the middle of Q3.
In this newly created role, Stephen will lead global operations, including oversight for the expansion of AMP1, as well as future operational centers. The business leaders of supply chain, logistics, manufacturing, and quality will now report directly to Stephen.
It sounds like this guy's the new COO. I mean, all the key players are reporting directly to this guy. You're adding a layer of executive management. You can imagine Elon Musk having people report, all these people reporting to some other guy. Why isn't Peter Rawlinson handling this stuff? It's obvious that Peter Rawlinson has now got serious problems, and they got to bring somebody else in to fix the mess he made.
Ensuring we execute in tight alignment across these business units. Stephen's wealth of experience in manufacturing and operations will be a tremendous asset to Lucid. Most recently, he was head of component operations at Stellantis.
So you get this long list of, all the stuff that this guy's done, but that's the same crap you told us about your executive team before. When you sold us this company before, you said how great your executive team was. And now apparently your executive team wasn't that great, and you have all these logistics problems that your executive team didn't handle. So now you got to bring in some other guy who hasn't started yet. When is this guy actually going to get in place? How long is it going to take him to get his grounding in the company to establish all the connections he needs to make things happen? This is a huge issue. This is a major delay. It was him. There's like 3 other people that were hired in different positions in logistics and supply chain and all this stuff. And it's going to keep, this is just a sign that you're not ready. But why weren't you ready for this before? This is one piece I want to cover. There was this bit from Sherry, the CFO, about capital expenditures. Listen to this, and I'm going to explain why.
CapEx in the first half of 2022 was $494.9 million.
Almost $500 million.
While the timing of CapEx outflows can shift quarter to quarter, we continue to expect capital expenditures for the year of approximately $2 billion.
So they spent $500 million on CapEx in the first half of the year. They're expecting to spend a total of $2 billion, so that means $1.5 billion for the rest of the year. So they're going to triple CapEx in Q3 and Q4 compared to Q1 and 2. That's going to be a big outflow of cash, and it's not offset by a big amount of revenue coming in because they're not delivering a lot of vehicles. That's going to be a big cut into their cash pile. Basically, they're going to spend $1.5 billion out of the $3 billion cash pile. Their cash pile is going to get reduced dramatically, and that doesn't count all the other expenditures they had that are cutting it. That's just the CapEx hit on their cash pile. So as their spending goes up, they're really starting to look in trouble for their cash situation going forward into the next year. Okay, so I'm skipping the Say Technologies retail investor questions because they were mostly not interesting and didn't lead to interesting answers. And of course, Rollins had time to prepare for those because he knew what they were going to be. Let's check out, there's 2 other analyst questions, and each question was really 3 questions. But let's start with the first one.
Our first question comes from the line of John Murphy with Bank of America. Your line is open.
First, Peter, you mentioned that there were finished vehicles that were held at the factory and not factory gated and ordered as finished. I'm just curious, how many those were.
Notice he asked how many. Peter's not going to answer that question. It's the first question he asked. How many? Peter's not going to answer it.
And how many of those are close to being finished? Second, as we think about the logistics center being brought on site in Casa Grande, what the incremental cost for that would be, and does that have any impact on capacity? And then the third question, Sherry, what is the ABL borrowing base that's backstopping the new $1 billion loan.
This is about some borrowing that Lucid is doing, some borrowing facility that they've set up.
Or ABL facility. And you mentioned that might be upside. So what other assets could be pledged for that ABL?
So that's some specific questions, and of course we're going to get non-specific answers.
Yeah, I mean, the first question was the cars that we held back through Q2 at the factory. We did that to really ensure that the quality was just perfect.
That wasn't the question. The question was how many. We just want to make sure. He's been talking about quality since February of 2021, or maybe it was May of 2021 when they announced the SPAC merger and they reduced the deliveries, saying, well, we wanted to make sure that we got the quality just right. So they've been having quality issues for like a year and a half now.
It was just fit and finish, adjustment on what we call flush and gap, the hood to the fenders, the finer points, the finessing that you would expect, features and the quality commensurate with a luxury automobile.
Again, he's giving a lot of fluff, talking about their quality, not answering the question, how many were they, and how many are close to being ready to be delivered? No answer.
And although many of those cars were meeting some of the standards of my quality team, I took the decision that I really want to up the game here and get things right. Now we're actually releasing a lot of those cars. We're drip feeding them to our service centers right now, and they'll find themselves their way through customers, having had that attendant love and attention and care. And I think they'll be delighted with our best efforts to make them as perfect as they can be.
So to be clear, these vehicles were not adequate quality when they left the factory. So they sent them to their service centers to be adjusted. Are the buyers going to know that their vehicle wasn't adequate coming out of the factory and had to be adjusted? Does that have an impact on the overall quality of the vehicle? These are questions we don't know the answer to.
You also asked about the logistics center at Casa Grande. Now this was this was pre-planned. Part of the massive 2.85 million square foot expansion does include several hundred square feet, 100,000 square feet of a logistics space.
Several hundred square feet and 1,000 square feet. This is tiny. Their logistics center is tiny. Several hundred square feet? That's smaller than a small house. 1,000 square feet is smaller than a small house. What are they talking about? And he's saying, well, no, the logistics thing was always pre-planned. Well, then why did you hire these 4 people? Why are all these changes happening? Why are you telling us about this now? You didn't say in earlier investor calls at any other point, hey, we're bringing logistics in-house eventually. This was you encountered logistics problems and you changed your plans. And now you're trying to tell us this was pre-planned. This does not sound credible.
What we're doing is just accelerating that at a very modest outlay, just getting that a little bit quicker, because the closer we can bring the buffer stock and the materials to the line, that is key to creating a more efficient flow of material within our own house. So this is nothing new. It's just an acceleration of what we've already planned.
That's right. So no real incremental cost to speak of with respect to that LOC. You asked about the ABL. I mean, we are just delighted to put that in place with this world-class group of banks and, in our syndicate. The borrowing base, the initial committed part of it is $1 billion. Okay, and then we can borrow up to about a quarter of that billion right now based on eligible assets. That we will grow into more over time as inventory goes up, as other of our assets go up.
This is the question. What are the assets that they're going to be able to rely on to go to lenders and say, hey, lend us money. We have these assets to balance your lending. And she's not really giving a straight answer other than as inventory goes up. Well, if the inventory of cars you can't deliver goes up, that's not really an asset that's going to impress me as a lender.
And so that is something that is going to be available to us on a growing basis just as we move forward and mature as a company. The neat feature about this ABL is it also has an accordion feature. So although the second part of it, the accordion part, is not committed yet, it is up to an additional $500 million that's going to be available.
So this is just like they're playing financial games. we've got this loan out here and we can get $250 million now and we'll be able to borrow more later. And then down the road, it's got this accordion feature. We'll be able to add another $500 million down the road. Basically, it sounds like they've got $250 million in loans that are committed. And then in theory, they might have another $1.2 billion available, but we don't know if that money is ever going to be available because we don't know. It's an issue. Last analyst question. Again, I believe this is a three-parter.
Hey, McKelly with Citi, your line is open.
Great, thanks. Good afternoon, everybody. Also, three quick ones from me. First, it sounds like on the logistics issues, you've identified the problems and the team is in place. Hoping just you can elaborate more on the level of confidence in the second half of the year. Maybe talk about where you expect production split between Q3 and Q4 and degree of confidence you have into growing that for next year.
I love this question. Peter's answer, I'm going to roast Peter when you hear this answer, but let's keep going.
Secondly, I was hoping you'd also comment on the rate of reservations that you saw after the June price hike. Just curious on what you saw for demand there. And lastly, Sherry, maybe you could comment on the minimum cash balance you'd like to have as you kind of plan out liquidity into 2023.
Again, questions they're not going to answer, but let's go with their answers.
Hi, Peter here. I think it's a really excellent question. We've based our guidance based upon a mindset which is neither super unduly optimistic nor unduly pessimistic.
We based our guidance on a mindset?
Very balanced approach, and we've taken a very comprehensive and very thorough analytical approach to the risks and opportunities that we see and which confront us. This is an imperfect science, an imprecise area, but the entire executive analyzed this very thoroughly, and we have a very high degree of concurrence in our collective thinking, which has led to this revised guidance.
We got together and we talked it out and we decided this is the number we're going to give you. There's no substance to that at all. The substance is we all talked about it and we decided to tell you 6,000 to 7,000 vehicles. He gave no substance at all to the confidence or the rationale behind coming up with 6,000 to 7,000 produced in the second half of the year. Nothing.
So let me talk to the reservations question. So as you can expect, when we announced in May at our May earnings release that we were going to keep the old prices in effect through the end of May and not have them go into effect until June 1st, that did bring forward some reservations. So we had a very large spike that happened in May. You see that as we went from 30,000 to 37,000. That's the largest growth that we've ever had in a 3-month period before. So that did happen as expected. I'd say that the pull-aheads had a little bit more pure in it than others, which you also would find as being intuitive, that the lower price points might be a little bit more price sensitive, so looking to lock in that rate. Now, what was really interesting is as we moved ahead the next couple of quarters, and we looked at the reservations that have come in June and July, if we take that June and July base that we've had, and then we add to it the increase, the over-normalized increase that we got in May, we are still way ahead of where we would typically be if we were just normalized through June and July.
But there's no numbers. She's saying it, but there's no numbers. She's just asserting it. We're way ahead. Well, where's the support for that? Where are the numbers?
So that pull ahead we're seeing really might have been a bit of a bump up, just kind of like a marketing event almost, if you will. The other thing that was interesting as we looked at the June and July, reservations that are coming in, is that they continue to be allocated across the same mix allocations that we saw pre-price hike. So you're still seeing pure highest, followed by Grand Touring and then Touring. So Grand Touring continues to be above Touring as well. So we're seeing what I would say is very encouraging response and reservations following similar patterns. And when you take the bump in May with the reduction we've seen in June and July, we're sitting in a really great place.
Again, there's no numbers behind what she's saying. We're seeing encouraging numbers. Well, what are the numbers? No answers.
And then third, I think you had a question about, minimum cash balance. So, that one's interesting. There's a lot of different ways to model this because the way we are looking at the $4.6 billion, and when I talk about being well into 2023, I'm talking about going in accordance to our full plan, which is investing in Saudi Arabia, investing in all of our vehicle variants, investing, at this swift pace that we have chosen to do. We have some options there, right? So when you think about the minimum balance, you could stretch that out if you want. So, I'm not really going to provide any guidance.
Not going to provide any guidance. The question was, what minimum cash balance do you need? We'll talk for a lot, and then I'm going to tell you I'm not going to answer your question.
With respect to how much cash we want in the bank, but I just want you to know that you're going to continue to see from us the same type of proactive, kind of opportunistic behavior that you've seen all along. Every quarter we're coming to you and we're telling you about something interesting that we've done in the capital markets. We did the convertible bond offering. Now we've done the ABL. We put in place the $3.4 billion in Saudi Arabia. So I think you're going to continue to see that kind of action, taking place, from us, monitoring the markets and making sure that we're doing what is prudent on behalf of all investors.
What she's telling you is that they're very good at playing financial games. Unfortunately, they're not very good at making cars. It would be nice if they could make cars, because if you could make cars, all these problems go away. So instead of making cars, they're playing financial games. They're getting this loan facility, they're getting that loan facility. They're playing all the games with these numbers and those numbers. But when it comes to the fact that they're running out of cash, their cash balance, is going to drop, a couple billion by the end of the year. And you go into the next year, and Q1 or Q2, they run out of cash. Where are they going then? We don't have an answer to that question. I'm not sure if we're going to get an answer to that question. I guess we'll get the answer when they run out of cash, and it's not going to be pretty. So that's it, another episode in the train wreck that is Lucid Motors. I've called this in September of 2020. I've been right all along. There have been some bumps in the road. They did deliver cars, but they're not delivering them well. They're having all kinds of manufacturing problems. They're not honest. They continue to be the opposite of transparent. And even when Bear, if you watch Bear's video at the end, he's kind of like, he's a fan, he's an investor, and he's just not satisfied with that call. I talked to Bear. I want to see if I can interview him soon so we can have a conversation, because he's pro-Lucid and I'm Lucid Q. I think it would be a good Zoom interview for me to talk to Bear and get his take on things. Anyway, please check out the t-shirts at elonbits.com, Cybertruck t-shirt, Tesla Air t-shirt, all these t-shirts, Lucid Q t-shirt if you want. Please check out my other videos. Support this channel on the Locals platform on Patreon or as a YouTube channel member. Links to everything in the description below. Please subscribe, and thank you so much for watching.